then the recession that followed, I remember telling them no one will go to movies anymore, no one's going to go to the malls anymore, we're all going to be too scared to fly, and somehow we found our way out. But remember, Bill Greenspan had cut interest rates almost 0 to 1%, and at the same time, there was more fraud and more corruption going on in our banking system and our lending system than we've ever seen in the history of the planet before. People were borrowing money they knew they couldn't pay back. People were lending money they knew they would never see again. Taking the commissions, pocketing commissions and laughing because some other guy was going to be stuck with the loan. Happened all over. If you want to point to what happened to our economy, they lied. If no one had lied, none of this would have happened. And when we talk about the basics of our economy and the basics of our system of government and the basics of our rules, thou shalt not lie. If no one had lied, none of this happens. None of it. It's all credit. Credit is based on faith. Credit is based on trust. Credit is based on being what you say you are. And the funny thing about credit, and it's like, I said this once on CNBC, Tom, so I hope you don't recognize this, but Groucho Marx used to say I would never belong to a country club that would have someone like me for a member. And I always say I would never lend money to someone who'd come to me to borrow. It's kind of the same thing. Once credit goes, see, if I don't want to lend money to Tom because I don't think he's worth it, and he says, well, come on, Pete, I'll pay you 5%. I said, Tom, I don't think you're worth it. He says, okay, I'll pay you 10%. You're not paying me 5. How are you coming up with 10? See, so credit doesn't quite work like other markets. Buy something for 100, that's too much money. Okay, buy for 50. We find a price. But credit doesn't work that way. Once you deem someone's not creditworthy, you don't care. What difference does it make what interest rate you're going to get? What difference does it make whether or not they're going to, if you don't think they're going to pay you back, it really becomes a moot point of how much they're not going to pay you back. So we had this implosion. But what I think is that we really started seeing the second rat taking the cheese here. And the market would be here if it were not for all of the mortgage nonsense that created all that. And if you look, this is really a nice kind of grinding up here. Fourth quarter of 2008 was, if you take the S&P 500, the 500 stocks that they deem as the most relative, most relevant, most representative, those 500 companies, if you add up all their profits in 2008, the fourth quarter, were 0, less than 0. They lost money. It's the first time it ever happened since the 1930s that the S&P didn't make a profit. Profits are what matter. The old man of the sea, profits go to 0.